S&P and NASDAQ hitting fresh intraday highs today. So how far can this record-setting rally run? Joining me now at Post 9 is Ed Yardeni of Yardeni Research. Nice to see you.
My pleasure.
I mean, this thing just keeps going and going and going. Is it going to continue to go?
It's a slow motion melt up.
It doesn't feel that slow anymore.
Well, you know, on a day-by-day basis, but it's adding up to substantial gains clearly. And I think the market is coming around to a view I've had for a while, that the economy is resilient and it may not get a recession anytime soon.
Maybe so, but it may get a slowdown.
Well, it may get a slowdown, but not a recession. Bear markets are caused by recessions. Corrections are anticipating recessions and that don't happen. I don't think recession expectations are particularly high right now. I think the market is fairly confident that the consumer is going to continue to spend, and I agree with that. And capital spending has become less interest rate sensitive, and it's clearly driven by the technology sector, which I think continues to drive it.
When people say the market is expensive at 22 times, your reaction to that is what?
My reaction is, how long do you think this expansion is going to last? If you think it's going to last through the end of the decade, which I think it will, I'm not promising that there won't never be a recession again. But let's face it, the economy has demonstrated for the past 3.5 years that it's remarkably resilient. It's put up with a pandemic. It's put up with a rebound in inflation, the tightening of monetary policy, Russia invading Ukraine, and here we are.
Well, we flooded the zone with so much money at some point.
It is what it is, though. I mean, we did. And the money's still, and there's still an enormous amount of money out there. And by the way, one of the reasons the consumers continue to spend is baby boomers, people of my generation, have accumulated $80 trillion of net worth. And I'm not retiring, I'm still working for a living, but my friends are retiring and they're spending money. And meanwhile, their stock portfolios are going up, so they're happy.
What concerns you, if anything? Because you don't sound too concerned about anything.
No, I'm always concerned. You have to be concerned about things.
Well, what?
Clearly. Well, I mean, tariffs are still not a done deal. And we'll see what happens with the tariff situation, I guess, on August 1st. And we'll see what the economic implications are. I think there may be some pickup in inflation over the next few months. And I think, you know, there clearly is this issue between the Trump administration and the Fed. I think that could give us some...
Well, I'll say.
Yeah.
Well, how much are you concerned about that? I mean, we're going to get this, you know, as we said, almost unprecedented visit today from the president to the Federal Reserve building. Whether, oh, you think it's extraordinary? Tell me more.
Well, it's extraordinary because it definitely signals that the administration on a daily basis wants to eliminate the Fed's independence. And people like Warsh have indicated that they think the Fed should be cooperating with the Treasury and that there should be an alliance between the two of them. But I think a lot of us would disagree with that. And we saw what happened when there was a rumor or just a discussion for like a nanosecond that Trump was going to fire Powell. The stock market took a dive and bond yields went up. I mean, at the end of last year, we saw the Fed lowering rates, and I said that didn't make any sense, and I predicted bond yields would go up. They went up 100 basis points.
Do you think they should cut this year?
I still think that they're none and done. I mean, that's been my
none and done.
None and done. That's been my position since the beginning of the year, and so far so good. But the year's not over. I think a lot of people are thinking about September, but I think we're going to get somewhat hotter inflation numbers. Look at initial claims. Initial claims might be indicating that the labor market might actually be strengthening, and the reason for that is if everybody just went through this agita about the tariffs, and we got through that with the market being at a record high.
I know, but you just said that you think we're going to get some hotter inflation numbers.
Yeah, moderate means that my thinking on tariffs and inflation is that they're not going to increase inflation. They're going to keep inflation from going down. In other words, inflation is going to be suddenly stuck around 3% instead of going down to 2%. That's kind of the way I'm looking at the impact of tariffs.